Alright guys, so in this video, I will teach you the ICT silver bullet trading strategy. On my YouTube, I have already uploaded a video on this topic, but it is not like in detail. But in this video, I'm going to explain each and everything in detail and how you can trade it to make profits, if that makes sense. Okay, so what ICT exactly says? Listen to this very carefully. He says that before 10 a.m. New York time, look for a liquidity that has been swept. Okay, so before 10 a.m. look for liquidity that has been already swept, right? Before 10 a.m. look for liquidity that has been already swept. Okay, now once you identify the liquidity that has been swept, you want to identify liquidity, right, that has not been swept yet. Okay, so let's say that, okay, 1 minute, you have buy side here and you have sell side here, right? So this is buy side liquidity and this is sell side liquidity. Okay, so let's say before 10 a.m. you see that price has taken out these equal highs over here. Okay, so now price could be going up, you know, could be consolidating, whatnot, but after 10 a.m., right, after 10 a.m. look for market structure shift with displacement on 1 minute time frame. Okay, so let's say the clock hits let me go here. The clock hits 10 a.m. right here. So 10 a.m. Yeah. Now you want to start looking for market structure shifts. Okay. So let's say you get a beautiful displacement. Okay. Like that. Now ICT says you mark out the fair value gap. You take your entry. You put your stop to 5 handles. Okay. 5 handles on E-money S&P is going to be somewhere around. I'm gonna teach you what it means. Okay, but for now he says your stop loss goes to 5 handles and your take profit goes to 5 handles. So basically he tells us to aim for 1-to-1. Now that in my eyes is very low. Okay, but he says that it has a probability of around above 80%. Okay, so you're gonna win most of the time. However, what I've noticed with my back testing is when you can simply go for 1-to-2. That is the perfect risk to reward ratio for this strategy that I've found back testing. Okay, and when price goes to like 1-to-1, you go break even. So when price comes back to 1-to-1, you go break even. So here are some key things that you must note. So let's say there's like a significant low here or maybe here, you know, a significant one. Okay, and price takes out that low before coming back to your entry, then you have to be cautious. Okay, because price has already taken out sell side, it could just go back up again. You want to identify, so let me give you this little example here. So this is external market structure, right? And inside this you're gonna have like this lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so you want to look for market structure shift of internal market structure. Okay, you do not want to look for this. If price comes back and takes out this low here and then comes back to your entry, do not take that. Okay, it's not going to work out. You must identify the internal market structure, which is this right here on the 1 minute time frame. You look for a market structure shift, happens right here with displacement. Take your entry, go for 5 handles, and or just put your stop at the high over here and go for 1-to-2. So let me show you what I mean by handles, right? Let me go to futures right here. Okay, so let's say that for example, okay, let's say your entry is at the close of this body. You put your entry here. Now notice this number right here. Stops 3.50, right? It shows 3.50. You move it to 5, and that is your 5 handles stop loss. You go for 1 to 1, that is your 5 handles take profit. So let me give you guys a couple of examples and then we will move on to the next topic.